Live from New York, I'm Vonnie Quinn. This is Bloomberg Markets. It's time for Futures in Focus. Joining me now from the CME is Chris Gersch of Bell Curve Capital. Chris, no prizes for guessing that I'm going to talk about oil today and the elevated price. We stabilized Friday and we look to be holding on to that stabilization today. What would it take to send these prices higher once again?
Yeah, I thought we would actually see the 65 handle. Overnight trading went up to 64.72 on some good volume, but unfortunately, what I'm seeing is a lot of profit taking. I don't think there's a lot of short sellers coming in. A lot of the moves are lower lows, lower highs, small bars, but that's all really based on, information kind of slowing down coming out of the Middle East as far as any retaliation and any action in the Strait of Hormuz.
I mean, people like to talk about what will happen next policy-wise, but in the markets, we're not seeing a huge amount of trepidation. I mean, more so before the session started than now. Even WTI is only up 16 cents right now. Is the oil market completely discounting the possibility of a major response on the part of Iran or the U.S.?
Yeah, I think that the response is definitely muted, and you saw that Brent WTI spread pop above $6, which is high, and ultimately, I think really this sell-off is profit-taking on that December manufacturing PMI coming out, and the contraction being 1%, the steepest amount in 10.5 years. So ultimately, I think there's a wait-and-see approach on a lot of these traders, but the bids are ready. If U.S. does, retaliate. As far as any sort of move on Iran or anything like that, we will see 65, 66 in WTI and above, 72 on Brent.
All right, Chris, thank you for joining us today. That's Chris Gersch of Bell Curve Capital from the CME.